Well, I did talk about the possibilities for Friday being a more positive day too in yesterday's video. What I wasn't thinking about at the time is the fact that Monday is a holiday, which means this is a holiday weekend. Wasn't thinking about that mainly because America has so few holidays in the first half of the year. But at any rate, Monday is a holiday, which means we also got pre-holiday trading. Notice I said pre-holiday trading. Okay, actual holiday trading. That is to say, if there's a market open on the holiday, can be very thin in that market, but this is pre-holiday trading, which means there's a very positive bias associated with it. Almost always happens that way. So today was a combination of Friday trading and pre-holiday trading, which made it basically Friday trading on steroids. Okay, and the market reflected that. It went way up more today, boosting the result of yesterday's bear market bounce considerably. And on top of that, today we also did get an end of Friday bounce, okay, as is more usual and typical. There are a few Fridays in the recent past when that didn't happen at all. That's very unusual. The far more usual situation is to have an end of Friday bounce, and since the market was way up already going into the end of Friday bounce, the market went up that much more as a result. Okay, adding to the gain, in other words. Okay, so not only are traders usually on a Friday trying to squeeze every last drop out of the market to get the end of week bar going into the weekend to look as positive as possible, but since it's also free holiday trading, meaning the euphoria associated with that is also in the picture, they did everything they could to squeeze every last drop out of the market today, and they did so. Okay, in fact, the market started dipping a little bit near the end of the day. They managed to blast it back up even more, went straight up into the close, added another leg to the up move for the day, and closed at top tick. Okay, with the Dow making it above another round number at the last moment in the process, the S&P 500 ended up managing to get beyond 100 points up. In other words, managed to get 100 points up just before the end of the day yet. Okay, and the NASDAQ, the technology index, also went above a major round number today in the process of doing all of this. So going into the weekend, the traders most certainly got everything they wanted to get, everything they wanted to see in the overall near-term big picture. They probably couldn't be happier about the state of the market affairs going into the weekend. Noting also that typically coming out of a holiday, whether it's a holiday weekend or a holiday otherwise, there tends to still be a positive bias to the market for a time, anywhere between a few hours on the first day and even a few days, depending on circumstances. No way to know ahead of time exactly how that's going to play out. Okay, so the bottom line is that you can expect the market to still have a positive bias for a time coming out of the holiday as well. It's a Monday holiday, so the market won't be open again until Tuesday. And we'll just have to see how long that positive bias lasts. How long it lasts may well say something about what the overall environment currently is, but we won't know that till we get there. Okay, so bottom line is that for now they managed to pump it up again. They managed to accomplish what they wanted to near term and no uncertain terms, which is to get away from that nominal bear market indication. Again, noting that 20% down is the official designation of a bear market. That is, in conventional terms thinking, it's a completely arbitrary number, okay? Really means nothing in the big picture of reality. The reality is the overall market is thoroughly in a bear market already, okay? Even though they never went below 20% for any length of time and are now well above 20% again for the time being. In other words, nowhere near the official conventional declaration of a bear market, okay? And the market may well hold up a bit, as noted early next week yet too. Once the market's open again on Tuesday, we'll have to see how long that lasts when the time comes. I do know one thing for sure: once the true scope of the overall circumstances becomes probably abundantly clear, not just clear, to the Wall Street traders, the market will start going down in no uncertain terms, well below the conventional 20% threshold of a bear market. And that will happen no later than when the national debt goes exponential enough that the Wall Street traders catch on to what's going on there, and may well happen before then already, depending what else is going on in the world along the way. Okay, in fact, that's kind of what I'm expecting, but no later than when that happens, the market will start going down in no uncertain terms. Okay, but we'll just have to take that as it comes, take it a day at a time to see how we get there, and just first now get the weekend out of the way so that the markets will actually be trading again, so there's something to talk about in that regard. So we'll see what happens on Tuesday and Wednesday and go from there.